Hey guys, I'm back. Hope you had a great weekend. Thank you for being patient on me, as sometimes I release these videos really late and sometimes I take a few days off. But I'm here to provide the top quality technical analysis for you guys. And today I'm going to take a look at Thinkific. Once again, I took a look at this stock before, and the last time I looked at it, it was all the way up here, and it looked like a cup and handle was forming. But what happened was we had a retest of this area. It couldn't break this resistance, and it stopped just short by 2 pennies. It hit 1917. Over here, the high was 1919. Over here, this high was 1947. And it stopped just short of that resistance area. It was a little bit of a volume spike, and it did a pretty big drop since then. I think it was around 25-30% drop, or even more from the high to the low. But we started to get a decent recovery. And the question is this recovery going to continue? Now, first of all, in regards to this, what would have been the signs to at least get out for the short term? For the short term, the sign to get out would be the inability to break this resistance, that little bit of a volume spike, and the definite sign would have been breaking this lower support trend line that it was riding. That would have been the definite sign to get out for the short term. And I actually did. I took some off the table anyways, not the whole thing. And then I re-entered what I sold around here. It was in the high 15s. It was in the high 15s. I didn't think it would go all the way down to 14. It didn't last there long. And the volume was quite low. Like, look at the volume that day that it hit 14, 36,000. Next day, 32,000. It's not a lot of volume in this stock. So a little bit of money can go a long way in this stock, and it can go both ways. With that being said, it can go a long way up, it can go a long way down. A little bit of money has the power to influence this stock a decent amount because the liquidity is low right now. But what I did was I took a look back at Shopify, and I went back all the way to the beginning days of Shopify, when Shopify was just $20 a share. And it was very similar. Look at the volume. 17,000. Look, 10,000 this day. 11,000. 13,000. This day was 85,000. So there was a big there's a big similarity in terms of the fact that Shopify had a very low volume when it first came out. And obviously it's a lot more now. And it picked up over time, as you could see. And the volume's a lot more now. And there's a lot more dollar volume changing hands in it now. So just because there's low volume now in Thinkific, it doesn't mean it's going to be that way forever. If it catches on, if the company starts growing, if more people want to invest in it, if more people hear of it, if it starts trending, whatever else it is, then the volume's going to get higher. And low volume can go both ways. Like I said, it can drop a lot. If there's any big shareholders that want to sell a lot of shares, they can influence the price a lot if they sell a lot of shares, and that's a negative. And sometimes it's hard to get in and out of position, so I don't really recommend day trading the stock because the spreads, they can be 10, 20, 30 cent spreads, and there's small bid and asks. There's small shares on the bid and the ask. So that's a negative. But the positive of having lower volume, and there's a positive, is that means not a lot of people know about it. That means it's not been super hyped up or anything like that. And for that reason, that means you're getting in early before the hype, if there is hype. If there's going to be a hype, and there might not be a hype, and this stock goes down, and maybe the company doesn't perform well, whatever it is, that's obviously possible as well. But if there is going to be a hype, if interest is going to go up in this stock, if demand is going to go up in this stock, the fact that there's not that much selling pressure and a little bit of money goes a long way, and the fact that the volume's low right now means you're getting in at the beginning of the game. I remember the weed stocks was the same thing. When I got in the weed stocks, Canopy Growth, it had fairly low volume early on. And I remember telling someone, and then the guy told me, he was more of a professional, and he's at the time, and he's like, no, I don't touch stocks with volume less than 1 million. So at the time, Canopy Growth was only like 200,000-300,000 a day. It was only $2 a share, so there wasn't that much money changing hands in it. But eventually, canopy growth went into the millions. It even hit like 10, 20, 30 million some days in volume. And so it just shows, sometimes getting these low volume picks. And another big example is LSPD. And I was buying this one early on when it came out. And the volume was very low. That first day it was high. 4.3 million. But then it was really low. Look, 80,000, 100,000, pretty low. Not as low as Thinkific is right now, but just between 50,000 and 200,000 was pretty regular for this stock. Now over time, it's picked up a lot, and now the average volume is around 500,000 or so. So it just shows how things can change over time. Now let's get back to Thinkific. So Thinkific has been setting a higher low day after day right now. So obviously, as a bull, and I'm a bull on this stock for the long term, I do have position in this stock. I want to see this pattern continue, this higher daily low pattern. But I wouldn't be too shaken if it breaks, because we haven't really set a clear higher low on the daily yet. So we might want to pull back, set that higher low before rocketing, hopefully, to higher highs. Now, we don't know what's going to happen for sure. There was this little bit of a volume spike the other day, but it doesn't show up on the hourly chart, that volume spike. It was like 70,000 shares. It shows up on the daily. And let's take a look. 78,000 shares. This is July 22nd. Shows up on the daily. And we go on July 22nd, this day over here. These three candlesticks. 4.5 thousand, 8.8 thousand, 8,000. Nowhere in there is there 78,000. So what this means to me is that there was some sort of transaction between a fund or an institution or a hedge fund doing a transaction with a shareholder, somebody who was selling a big bulk of shares at once or whatever it was. There was a transaction between two parties that didn't go through on the public market. It went through behind the scenes, and it's showing on that daily candle, but that's why it's not showing on those 4-hour candles, is because the transaction went through behind the scenes. Can't confirm that for sure, but that's what I think. I don't consider this a volume spike to say a top or anything, because I do think it was something going on behind the scenes. I actually think it's probably a good sign, because they announced this day that they're going to announce earnings. I believe it's on August 10. Let's check to make sure. Thinkific. It is August 10. It is August 10, actually. Thinkific announces timing of second quarter 2021 results conference call and webcast, which will be on Tuesday, August 10, 2021, which is fairly soon. And this was on July 22nd. This is that day that there was that little bit of a volume spike. So I think there was some sort of transaction, and someone was buying, perhaps in anticipation of hopefully good earnings when those come out. Now we look at the last earnings on Thinkific, and Thinkific earnings, and the revenue has been going up. 80% gross profit, which is good. Revenue is only 8.3 million, not a significant amount of revenue for, what's now a $1.2 billion company or so. That's the total market cap. So the company is overvalued on paper based on its current fundamentals. But Shopify was for a long time as well. And, sometimes you overpay for a company initially in anticipation that company works its way into that valuation. That's what happened with Shopify. Shopify was losing money for a long time, or their PE ratio was like 1,500 at one point, which is like astronomical. But, eventually their time came and they worked their way into their valuation. Now their PE ratio is a lot lower. I think it's less than 100, and they're making a lot of money now. And it shows how the market anticipates the future. The market looks ahead into the future. So hopefully, and the fact that this company is trading for a higher valuation than it should be based on their current financials says that the market expects this company to grow. And I've read a few other articles about this company people thinking this company is going to grow, some analysts, but they could absolutely be wrong. But there was some good feedback in the news. Canadian company could become the Shopify of online learning, and a few other things. So not going to take a look too into that. Let's look back at the chart. I like this higher daily low pattern. I like this higher volume at these lower levels. I like this double bottom that it had over here with two big lower wicks of buying the dip. It did get a little bit oversold pretty much on the daily. Okay, let's take a look. Starting to get a little bit of a curve in the MACD, but not a bullish MACD cross yet. We are trading under that 4-period moving average on the weekly. But right now, what it looks to me is that we're trying to set a weekly higher low, because there wasn't a clear higher low. This looked like a bull flag, broke the bull flag bearish, didn't pull through. But it looks like we're trying to set a weekly higher low, and that could be a good sign. If we set this higher low and then next week push up, ideally we want to see a couple green candlesticks and push up to all-time highs over here, or we could consolidate in a range for a while too, and that's possible that the company consolidates in a range as the company grows into its valuation. So that's possible as well. So what we could be looking at is a higher low to a higher high, all-time highs, or we could be looking at this higher low and to consolidate within an equilibrium range as the company works its way into its valuation before it's ready for a move higher, hopefully. Nothing's for sure. We could also break this support area and head even lower to all-time lows, or to test those lows of $12.02. That was the all-time low. That's the lowest it's ever seen. So if we break this support area around that $14 mark, that would be a red flag for sure. Right now, we got a nice uptrend going on the hourly. Our clear support on the hourly, we're looking around 1588, and then around 1560, 1550. That's our clear support areas on Thinkific. So, like I said, I do like this stock for the long term, but it is overpriced right now, and I'm not recommending it. Do your own due diligence, okay? I'm not a licensed financial advisor. This stock could very well end up going a lot lower and not be so good. And I always, because I'm keeping an eye on the charts all the time, right now I'm long. But if the chart tells me to get out, I'm probably going to get out. But right now, I don't see any huge red flags on the chart. It looks fairly good overall to me right now. So that's my thoughts on Thinkific. And like I said before, this stock is the company that I make my course website on. And that's why I like it, because I've invested so much time into building my course. And, I'm quite happy with the results of my course. A lot of people were happy with my course. And that's why I believe, since I invested so much time into my course, I should be investing a little bit into the company that I built the course on. So that's my thoughts. Thank you guys for watching. I'm going to drop more videos soon. Have a good night.